Yeah, it is. It's very cool. Okay, we are live. Hello, everyone. I will just wait a second here. Oh, we've got some people watching. Amazing. Thank you guys so much for joining us live. My name is Natalie Colalilo, and for those of you who don't know me, I'm the founder and CEO of Happy Healthy Women, and we go live every Tuesday. We do our lunch hour lives. Hello, Anne. And so we're really excited to be here today with all of you. Today, I am joined by the amazing Sharon Abrego, who is a trailblazer in our Guelph branch. And Sharon is also a mortgage specialist. And so when I asked Sharon, what she wanted to talk about, what I love about this woman is that she is so kind and approachable and able to talk to you in the most, non-threatening way, I would say, about the topics that surround mortgages and everything that we have to know about going about it in the right way. And so I'm really excited to be joined by this lovely lady. And today we're talking about credit scores and how those affect our buying power, when we're looking at buying property. And so I think this is a great topic because, as we know, financial wellness is a part of happiness, health, and success, right? And so thank you, Sharon, for being here today.
Thank you for having me. It's a pleasure.
Absolutely. So, talk to me a little bit about. Well, I guess let's start by sharing a little bit about you, and why you decided to go into this world of being a mortgage specialist, and yeah, what it means to you to help people through this process.
Absolutely. So, I actually have spent many years in customer service, so taking care of clients either by phone or by email. And then I was also an executive assistant, so taking care of my boss and travel arrangements and stuff like that. So, attention to detail and just being able to help other people has always been a part of my DNA. Um, Once I had spent quite a few years as an executive assistant, I kind of wanted to reach for a little bit something more, but I wasn't quite sure what that kind of looked like for me. So I spent a couple of years at home with my little guy and kind of figured that out for myself and did some.
Oh, Sharon is frozen, I think. For those watching, are you seeing Sharon frozen? Yeah, she just disappeared. Okay, hopefully she will be back soon. Thanks, Anne. Here she comes. There we go. Yeah, hold on, Sharon. I'm just adding you into the stream. Okay, perfect.
Sorry about that.
Um, that's okay. If you want to just continue where you were, I think
Yeah.
you were talking about your attention to detail, and then you have, yeah,
Yeah.
just where you were.
So, just being able to help families and being able to help them on the path to finding their dream homes and being able to help in the financial side of things and get them set up for home ownership is just so rewarding. And that's what kind of led me to that.
For sure. Amazing. So we're talking about credit scores today. And so why is it an important topic in terms of what you do?
It is. It's one of the main, aside from in like income and job history, credit score is up there with importance in terms of looking for a mortgage or any loan in general. Um,
Mm-hmm.
that's one of the first things people look at when they're, being questioned about lending you money. And so there's a lot of, I don't want to say stigma because it's not really that, but just people aren't really aware of what their credit scores are. And I think that's the biggest issue is that people don't know where they sit and how their actions when they're buying stuff and charging stuff on credit cards and making late payments, how that really affects them in the background, so that when, it is time for them to purchase a home, that their credit is ruined, and then it's going to take a little while to fix that. It doesn't happen overnight. And I think the more you know going into it, and the younger you are and the more the more you can help yourself in the long run. So
Mm-hmm.
that's what I like to educate people on, is just to be, number one is be aware of what your credit score is. And we do have an app for that called Mapolo, Mopolo. And if you download the app, and you just put my name in as the mortgage agent, it'll come up and it'll tell you, there's a mortgage calculator on there. It'll tell you your credit score. I know there's other apps as well that kind of do that too. Some of the apps don't necessarily have the same weight, in terms of lending and stuff like that, and how it affects your score and how that score is calculated. So I would just shy away from like other apps that, say they can give you your credit score in 10 seconds or whatever. So just be
Mm-hmm.
mindful of that as well.
Yeah, for sure. I love that. I wasn't even aware that there was an app where you could find your credit score. I mean, I have to say, like, I'm not someone that's looked at my credit score a bunch of times. It's one of those topics that comes up when, the last time I guess was when I was applying for a mortgage, right? So,
Yeah.
yeah, that makes sense. So Sharon, I know that you're mentioning, we're not aware of the things that we're doing maybe on a daily basis that would add up to a credit score. So what are some things that we can be mindful of moving forward that maybe we're not, like, maybe you're not so, I mean, like, things like missing a payment on a credit card or whatever, like those are quite obvious.
Mhm.
But what are things that are not so obvious that we can pay attention to?
So, one of the things that does impact your score a lot is your frequency of payments and whether or not you can make extra payments and keep your limits low. So if you have, say, I'll say two credit cards, because that's what the lenders like to see, a minimum is two, and they see that you're able to keep, within 50 to 60% of that credit card limit, that lets them know that you're responsible and that you can handle your cash flow and be able to keep that limit kind of in check. Um, and then making payments additional to what's actually due. So if you're able to, say, even make a $10 payment every, week or so or whatever, just to kind of keep your credit score higher, because it'll log that you've been making lots of payments. Not
Mm-hmm.
necessarily paying it off all in one chunk, because that doesn't necessarily help build your credit score. But making multiple payments more often will definitely help get that score up there.
Interesting. I didn't know that at all.
Yeah.
So maybe making, this is such a great call because this is like educating me so much. So maybe making like putting it in as an automatic payment, through your banking, to make smaller chunks of payments weekly, for
Yeah.
example.
Yeah. Absolutely.
Okay. Okay, cool. And you said something else there that sparked, I can't remember, but anyway, so okay, so credit cards are one thing. Is there anything else that we should be looking out for?
Um, well, I would say just don't overextend yourself in terms of, like when you're going for a mortgage, what they want to see is that what you're making in an income is able to spread enough that you're living comfortably and not like a paycheck to paycheck, or that you're house poor, because nobody wants
Mm-hmm.
that. And when you're in your first home and you can't go out and do the things you normally did because you can't afford to anymore. So just kind of keeping those credit cards in check and making sure you're not applying for one every other day and overextending yourself, I think, is really important. And just, if you need to have a car loan, that's fine. Like those kind of things are kind of part and parcel with owning a home and having a mortgage. Like you need a car to get to work, or, other things, like if you're going to buy a boat, or, you just don't want to be going on a spending spree and then not being able to be approved for a mortgage because you've overspent, and don't have
Right,
the room to have a mortgage payment in there as well.
right. So kind of prioritizing and keeping yourself in the best position in order for the banks to say, Yes, or yeah, like wherever we're getting lending from, right?
Yeah, like
Yeah.
I see a lot of people, they'll come to me, they'll be like, "Oh, I'd like to apply for a mortgage or get pre-approved." And, the first thing on their liabilities list is like a brand new vehicle. And that's okay if your income can support that. That's totally fine. But when you're already, if that $800 truck payment a month is gonna, plus your rent that you're paying now, we take that all into consideration. So it's just be mindful of what you're looking to spend before, trying to get pre-approved for a mortgage as well.
Right, right. Makes sense. I wanted to remind everyone who's watching that if you have any questions for Sharon, this is a great time to ask. If you've been wondering about certain things, I know that I recently asked a friend of mine, are mortgage rates better because of what's going on? Like, is now actually a good time to be, purchasing property or looking at property? So, I mean, I know that that kind of trails away from the credit score conversation, but would you be able to answer that, Sharon?
Yeah, absolutely. So, first thing is, I know we've been seeing a lot with like the Bank of Canada, and they're lowering their rates, and a lot of people will find that they assume that if the Bank of Canada is doing that, that all the banks are going to follow, and we're going to get really really low interest rates for mortgages.
Hmm.
That's not always the case. Bank of Canada, they don't they can lower their rates, but it doesn't necessarily mean that the banks or the immediate lenders that we deal with are gonna follow suit. Um,
Right.
so that's just one thing. Is now a good time? Absolutely. Our rates are low again, from at the beginning of the whole COVID-19 issue. So rates are starting to come back down again. Believe it or not, they were going up.
Mhm.
The last, I'd say, month or so, it's been a little bit high, but now it's coming back down, and now's definitely a good time.
Okay, amazing. So we do have a question. Does checking your credit score affect your actual credit score?
Yes. So you don't want to like be I don't know what you call that. Like you don't want to be checking in like every week or anything like that. If you're so every time you go out and you're trying to get approved for a loan or approved for any type of credit card, those are what are considered hits. So credit bureau will log all of those inquiries, and those will bring down your credit score. Now, let's say you're looking to buy a car and you're going from one car shop to the next to the next to the next. Each one of them are pulling your credit because you want to see who's going to give you the best rate or the best, car deal or whatever. So for each one of those, it will reduce. However, um, the credit bureau will kind of click in and be like, oh, wait, they're actually shopping for a car.
Mhm.
Same will go for a mortgage. If you go from one lender to another, and you're, getting your credit pulled, it'll show on the credit bureau, but they're a little bit more lenient in terms of how many points it reduces it because they're seeing that you're out looking for a car. They see that you're out looking for a mortgage. So they know that you're not, going to say Walmart and Best Buy and Lowe's and just applying for all these credit cards for the sake of shopping. You're actually looking to purchase something that is helping you. So, but yes, it does hinder your credit score a bit. So just kind of be wary of that.
Be aware. Yeah.
Yeah.
Cool. And yeah, that's a great answer and a great question. And we also had one from Renee. So Hina and Sharon, I've got a break on my mortgage payments for a couple of months. I've needed this break. I wonder how this will affect. So I guess she's talking about like the mortgage deferral,
Yeah.
deferring the payments through the bank. So how does this affect our credit score?
The banks have actually been really good with this, and lenders in general. They're not recording the payments as being missed payments at this time. So that is
Mhm.
good on that end of things. The only thing I would be cautious of is that those payments are going to be tacked on to the end of your mortgage term. So you're paying now the deferral, you're actually still have to pay for the interest. So
Mhm.
they're still going to charge you the interest that they would have gotten from your loan, and you're still going to have to pay that. And then you're going to have to repay your mortgage payments at the end of your term. So those payments that are attached to the end of your term as well will also have interest on them. So you'll be double. dipping for the interest. So just be mindful of that when you're looking for deferrals, because not everyone can afford that, and it's not ideal for everyone. So just make sure you're educated about that before requesting one.
Right, right. Yeah. And it's possibly, I mean, there's likely like an amount of time that they're allowing that for. So maybe not extending it the whole time, right? Is that
Right. Yeah. So like I think it's for 3 months right now. And not everyone gets approved either. So it all depends. It's a case by case basis right now. A lot of it is you really have to prove that you're struggling. Like you can't have
mhm,
10 grand in savings and then request a deferral. They'll want to see proof of bank statements and stuff like that to kind of make sure that it's a legit request and that they're actually helping the people who need it most. So,
right?
yeah.
But it's great to know that it doesn't affect, yeah, like that credit score or like a future purchase. Like, say in a year's time, you're in a better position and you want to purchase again,
Yeah.
right? It doesn't affect that. So that's great to know. Thanks, Renee, for asking that question. That being said, I wanted to ask about is there a difference between, um, well, I guess not because you're still applying, but we were talking about, purchasing your first home. And what about purchasing your second home? Is there, the types of things that they look at, like if you're looking maybe for an investment property or something like that, is there a difference in what they'll look at?
There is no difference in terms of what they'll look at if, like, for qualifying. So you'll still have to have an income that can support your current home that you're living in. And also, what they'll want to see is that you can make a 20% down payment on a second home.
Right.
That it's just because it's a little bit more of a risk for the lenders, so they want to be sure that you're actually in it to be in it. Like it's that you're legit and you can afford this.
Hmm.
And then there's kind of like a spreadsheet that the banks and the lenders will request to kind of some of them will take 50% of what you're currently paying in your mortgage and figure out if it fits in with what you're looking to buy. And there's a whole calculation in terms of that, but it doesn't, they still look to make sure that your credit score is good. They still look to make sure that you're within those ratios and that, you know, once your stress test percentage is applied, that you can still afford it.
Hmm. Awesome. Love it. Well, this has been so informative. So, Sharon, tell me a little bit about how people can work with you. Are you open to, people asking you questions? Can they get in touch with you through this app? What's the next step for people who are maybe wanting a little more from you?
Absolutely. They can contact me at any time. I love helping people. So, any questions you might have, I'd be happy to help. I do have a Facebook page. It's Sharon Abrego, mortgage agent, Greater Golden Horseshoe, or you can just look up KW Dream Mortgage. I have an Instagram account as well under KW Dream Mortgage. I'm on Messenger. You can email me, you can phone me. All of my contact info is on my website, kwdreammortgage.ca as well.
KW Dream Mortgage. I'm just putting it up here so that people can see it.
Sure.
Is that right?
That's right.
Okay. And one more question because you are not in Toronto, and I know that a lot of our viewers are. Would they be able to, like, can you still work with people in all areas, or, do you have
Yep.
to make appointments in person? Okay.
We help people all across Ontario. As long as you're in Ontario, I can help you. There's no,
Okay.
and I can do it virtually as well. So we don't have to actually, especially during these times, like for signing stuff and getting signatures, you can do DocuSign. So everything's virtual. We can do a Zoom meeting to kind of introduce ourselves and get to know, what you're looking for. But absolutely, I can definitely
Awesome.
help them.
That makes it so nice and easy. So if anyone is contemplating anything with regards to their mortgage or taking advantage of, lower rates right now, I mean, Sharon, who better than this amazing woman? She's so approachable. She's so lovely, and she can definitely help you out. And she's a happy, healthy woman. So Sharon, I want to thank you so much for being here. I'm sure that people got a lot of value through this, and they'll think twice about things moving forward. So I appreciate you so much, and thank you again so
Thank you
much for
so
being
much. I
here.
appreciate
Yeah,
it.
for sure. And for those of you who, are looking for more from Sharon, please get in touch with her. And also check out our website at happyhealthywomen.ca. I'm sure Sharon has some things coming up, some events. And also you're able to see how you can yourself become a leader with Happy Healthy Women, and be a part of our community to serve as well. So thanks, everybody. Have a great rest of your week, and we'll talk to you soon. Thanks, Sharon. You're the best.
Take care. You too. Bye
Bye.
bye.